All right, the market is puking again. We thought Friday and Tuesday was like, okay, we may be out of this, but it was just a head fake because today was just worse because the fear index, it's now flirting with new highs, like flirting with, highs that we saw like in March. But I want to share with you in this video few details based on facts from earnings from big companies that are actually pointing towards the fact that this might be an overreaction. I'm naturally a bull, but I just want to look at the facts because by looking at the facts, you know exactly how to position yourself in order to profit when the recovery comes. All right. So let's get into the details. Let me start by going over the market as a whole. So let's jump into some of the price action we saw today. Microsoft, the big tech, the giants, the fangs like Microsoft, Google. They had a pretty rough day today. Tesla down 12%. Man, Meta, Facebook down, 3.5% after hours. Even Amazon, man, the giant e-commerce, 4.5% on the day. Netflix dropping, Apple dropping. It was a bloodbath, man. It was a bloodbath. Now, the only thing that was kind of up is oil, rebounding based on what China said they're going to continue to support, the economy because they do know, they're aware that the economy in China is kind of the engine of the global trade world. Now, the thing is, what the market is sending as a signal now, when you look at some of the facts behind how to prepare or how to actually know how hard it's going to be a recession, is looking at the consumption, because the consumption in the US, it's part of what represents 2/3 of the entire economy. So as long as people are still spending, and I believe it's the case because on one hand, Americans are sitting on all-time high savings so far. Never in the history of this country, of this nation, people have been saving this much. In one hand, it was because of lockdowns. In the other hand, it was because of stimulus checks and, the hot job market. So that to me gives me the intent that, well, maybe even with interest rate increasing, which I believe the market is now kind of worrying about that, plus the economy slowing down. All right. So by looking at some of this consumption thing, I can already tell you guys that it is not as bad as, the fear and uncertainty and the doubt being spread out there around recession and in war and everything else. All right. Because when you look at Visa, the Visa stock, for example, reported earnings literally few minutes ago. It's up 4% after hours, and when you look at what the CEO is saying, Visa stock gains after earnings. CEO expects a robust travel recovery to continue. Visa says it saw only short-lived impacts from the Omicron wave in its March quarter. All right, so people are still consuming. The company posted a second quarter net income of $3.6 billion or 1.7 a share compared to $3 billion in revenue or 138 a share a year earlier. All right, so on an adjusted base, Visa is up 30% from a year prior and ahead of the FactSet consensus. All right, the Omicron variants, and definitely war seems not to have an impact on consumption because people consume with what? Credit cards and debit cards. So the payment volume was up 17% in the quarter, while processed transactions were ahead 19%. Visa saw 38% growth in cross-border volume, or 47% when excluding transactions within Europe. So even in the midst of the war, when you take Europe into consideration, people are still using a lot the credit cards and the debit cards, according to Visa, which means people are still consuming. All right. Now, if you jump into Google, Google stock actually missed a little bit on revenue, but it's because the stock is tanking because of the cost that increased. They hired a lot more people than this same period a year ago. Plus, the revenue on YouTube, was kind of short based on what the market was expecting. But for the first quarter, Google advertising revenue grew about 22% to reach $54 billion, topping consensus expectations for 54.12. it's only the YouTube advertising revenue that grew only 14%. Only 14%. So not as much as the market was expecting, but there is still growth there. The unit had been a fast-growing segment for the company in recent quarters. In the same period last year, the revenue grew by nearly 49%. So it is a slow in the revenue only for YouTube, but overall, Google advertising, it's still growth. Why does this matter? It does matter because companies are still pushing on ads, and they're pushing on ads because they may have not only the working capital for it, but also because they still betting that they're going to be a strong consumption on either products and services. So if I take this from Google so far, we're going to hear from maybe Facebook, because Facebook is another platform where you have a lot of data coming from ads. So we're going to hear more when Facebook reports. But if I take what Alphabet is telling us, if I take what Visa is telling us now, things are not that bad, because, as I mentioned earlier, the consumption of the US economy is part of, 2/3 of the domestic consumption. So, yeah, it doesn't seem as if things are that bad. Now, looking at the market, all right, I will say the fear index, which is the VIX, it's up 24% today only. This is a lot. But by looking at the 6 month, I'm thinking that we may not be out of the weeds just yet. Why? Because this whole fear might continue tomorrow based on earnings that are disappointing from, maybe Google and that we heard today. But it's a mix, because Visa was not bad. Microsoft was, beating. So Google is the only one among the top 3 today that are kind of disappointing. So maybe they're going to be a mixed feeling tomorrow. So I'm not expecting, a recovery just yet, because the last time when we had news coming from war, in Russia and Ukraine, the VIX jumped 36, and so far we are not that far. We are right. Maybe we are another 8% in the jump. So the VIX is very volatile. All right. So maybe tomorrow we're gonna have, or maybe this closing this week, I expect, a couple of days again in the red. And then if you take when this whole thing started with the war, we had maybe a couple of days. We had so from February 9 to March 7. So we had about 4 weeks, right? 4 weeks for the thing to kind of start peaking before it's winding down a little bit. So this started here, and we are already almost 3.5 weeks, so almost there. And that's why I believe this week, at the end of this week or beginning early next week, with earnings being still positive from the broader market, not only the tech giants, then we might see a reversal, especially if we see some news coming from China getting out of lockdowns, because that is adding to the worries of the economy slowing down. So, but for now, things are like a little bit disappointing. And whenever there is uncertainty, people tend to jump off the boat on some of the equities they hold. But if you have strong conviction in some of the stocks, because not all stocks are bad, this is an opportunity to kind of add to your positions or get into some positions on stocks you find really, really cheap, given earnings coming, or given where the quality, the standing of the company is at in terms of business revenues and outlook. So that being said, let's just wait, write it out, because it's not gonna end. It's not gonna long last. At some point, it's gonna end as well. So